Guys, listen to this. Evergrande, the second largest real estate developer in all of China, with over 1,300 total projects in over 280 cities across China. They employ over 200,000 people, and they generate more than 3.8 million jobs per year. And just last year, they reported $110 billion in sales. Now their total liability, that's another story. Over $300 billion that they are scrambling to repay, and this is the point of this video. I'm going to be sharing with you two things. Number one, who Evergrande is and what's going on. And number two, if you are interested in real estate, you're invested in real estate, you're a real estate agent, you have an interest or you develop, this video is a must for you to watch, because exactly what's happening to Evergrande can happen to you. So for those of you watching, make sure you pay attention, and if you got any value or get any value, please don't forget to hit the like button and let's dive right into it. Evergrande is on the brink of collapse. Literally, over $300 billion of liabilities they're trying to pay back to lenders, to investors, to home buyers, and they don't know what to do because they don't have enough cash and they have a cash crunch going on right now. As you guys I'm sure already see, the stock market is a bloodbath. It is red, it is going down, and you might be wondering, what does China have to do with us? What does China have to do with the United States? Guys, this is not a joke. Over $300 billion of liability to the second largest real estate developer in China. That's going to trickle an effect to us over here. We have billions of dollars of Chinese investment here. You're talking about a market that pours over into our market, and you're talking about markets are getting shaky right now. People are getting shaky right now and scared. In fact, going to China or watching videos about China right now, you're seeing thousands and thousands of people going to the banks, going to try to collect their money, their deposits, because they're scared. If this company goes bankrupt, watch what's going to follow. Who's at risk if a company goes bankrupt? You have the banks, you have the suppliers, you have the investors, and then you have the home buyers. Four major components when this company, if it goes bankrupt, when and if it goes bankrupt, are going to all be affected. And I'm going to dive into explain to you how it's going to affect you as well, and how you need to be prepared for it, and most importantly, what you need to do so this doesn't happen to you. They're playing at a big level, and you might be a lot smaller, but the more you grow, the more this can happen. What we're seeing right now, guys, is Evergrande is in debt, a lot of debt. And this debt allows them to grow, to get bigger. As you guys know in real estate, you leverage what you can, so then you can take that leverage at a cheap price, and then you can go invest it and make more money with that leverage, right? Evergrande, they're huge. You're talking about $300 billion. You're talking about the real estate developers, 1,300 projects going on, thousands of apartment complexes, thousands of homes, thousands of developments, right? Things that you might be dreaming for and you want to do. Now, what happens when you have all these assets? What happens when you have all these projects that you're hoping to make a return from? You start taking on bigger leverage. You start borrowing more money. You start trying to get bigger, not realizing that the bigger you get, yes, it's great, but you're tacking on more debt. You're tacking on more liability. You're tacking on more responsibility. And when things don't go the way you're thinking as you develop, things get bad. Just like they're getting bad for Evergrande right now. They're realizing that the property sales are declining. They're realizing that the market in China is literally a bubble. They're realizing that they took on more projects and more debt than they can. They're realizing that they were taking on more debt to fund other projects like getting with electrical vehicles, funding more projects like buying a soccer team, funding more projects trying to expand and scale and grow, only to realize that they're getting bigger, but bigger in debt, bigger with liabilities, bigger with things that they have to pay back with due dates coming up that they can't cover. Now here's how this relates to you and how you can protect yourself as a real estate investor, developer, or anyone who has interest in real estate. Guys, we know this. You can always get big and bigger and bigger. You can always get more and more and more. There is never a cap. There is never a moment where you're like, I'm pretty satisfied right now and I'm cool. I don't want to make more money. When you know that you can make more money, imagine there's a property right in front of you that you can buy and the investment looks good, the returns look good, the whole picture looks good. You're going to go and get it if you can get it and if you have the means. You're not going to say, I'm good, I don't want to make more money. And that's when the problems occur. That's when you try to scale, try to expand, try to grow. And it's not bad to do that, but doing it smart, doing it strategically. Now you're talking about a company who's the second largest real estate developer in all of China. I'm not saying they aren't doing it smart or they're not scaling smart. How'd they get there in the first place? From being smart. But sometimes being smart or too smart or thinking you're smart or too smart can lead you just like this. What happens if they have to file bankruptcy? They lose everything that they've built because they wanted to grow and grow and grow. And that's not a problem. But growing smart, growing slow but steady is the way you want to go. I'm seeing people that I personally know right now who own a ton of real estate. The market is so hot, so strong. And they're like, my property is valued 2, 3, 4 times more than what it was 5, 6 years ago. And they're like, it's appraising at so high. Why not do a cash out refinance? Why not pull HELOCs? Why not sell the property, take the profit and get bigger? Why not? Why not? And the problem with that is, guess what? You do an appraisal on your property. You bought it for $1 million. It's now worth $2 million. You take out a cash out refinance. Now you own the property, but now you have more debt on the property. You take that cash out, that money that you took, into another property. Now you have 2 properties with debt, significant debt. And now the market turns. Now you got 1 liability, 2 liabilities. Every month you got monthly payments. A pandemic comes. Tenants aren't paying you rent. You're not collecting. You got 2 mortgages you got to now cover. You lose this property. You lose that property. It doesn't happen to everybody, but during this pandemic, it happened to millions. During this pandemic, it exactly defined what over-leveraging means. 2008, I had in university, when I was going to college, my professor in 2008 owned over 50,000 square feet of commercial real estate, and he lost it all. He got completely wiped out, and he's now a finance professor because he over-leveraged. 2008 came, he couldn't continue building, and he was wiped out. This happens, guys. Playing smart and being smart in real estate is the game. Right now, I have in front of me opportunity to own more real estate, commercial real estate and residential real estate. And I'm not jumping on it. I'm taking a step back. Yes, I really want it. The numbers look great, but the risk is also pretty high. The risk is also there. And I'm deciding, do I want to take on this much leverage or do I want to take a step back? Do I want to make this investment or is now not the time? Do I want to get in when the market is this strong and this hot, even though the investment makes sense? Or do I want to wait things out? That's a decision, guys, that I have to make. And that's a decision that I want you all to understand and you all to make sure that you focus and think of that before just trying to grow. It always sounds good, guys, whenever you talk numbers and whenever you see profits and whenever you see opportunity. But when a shift happens or when growth becomes too much, too fast, and you start getting tons and tons of liabilities under your belt, so much responsibilities under your belt, it becomes very scary. This is why they say, what's your portfolio? You then share your portfolio. I own this shopping center and I own this apartment complex and I own 20 units here and I own 50 units here and I own this strip. But then they ask you, what's your debt on these properties? What's your debt ratio? What kind of equity do you have in them? Oh, I got 90% debt. You're leveraged 90%? You're leveraged 80%? That's not safe. I know big time real estate investors, they like to only be leveraged up to 40%, 45%. When they start getting to that 50%, they get scared. You want to always be sitting on equity to be safe. Not every opportunity you get to take equity out, you take it. Just because you have 400 or 500 grand in equity that you can possibly take out and still have a good 20, 30% down doesn't mean you take it. Sometimes sitting on equity to play it a little more safe is better for you. Sometimes trying to go too big or buy too much or do too much can bite you in the butt. Let me tell you something. Evergrande, $300 billion in liabilities, the second largest real estate developer in China, They're big, and they didn't get there by accident, and they're smart. But look what happens when you get too big, right? Look what happens when you grow too much. Eventually, something can catch on to you. 2008, what happened? Big time developers, big time investors lost their pants, literally, because they were growing, they were doing well, the market turned, and they got slapped. I'm not saying don't go big and don't grow, but I'm saying play safe, have a good amount of reserves, be aggressive, but be smart and tactical with how you move, especially in real estate, because if you're buying at the peak, you got to be able to have reserves, because if the market goes down, you're going down with it. And if you buy at the bottom, that's great, because now you can ride it to the top. But you can never time a market, guys. Specifically speaking, the stock market. It's a bloodbath because of this news, because everything is getting shaky right now. And most importantly, we have in September a lot of upcoming events that are going to be spoken about. And these events with the Treasury, these events with the Feds, these events in general are also causing the market to be scary. But this can affect us globally, and this can open the eyes for real estate developers here in the United States, because everybody learns from one another. Anyways, guys, there you have it. That's what's going on in China. That's what I don't want to happen to you. Whether you have 100 grand, a million, 10 million, 100 million, we don't want that happening to you. So be careful with your growth and be smart with your liabilities. Don't go all out thinking you got it and you know it. Understand there's always a risk. Thank you guys for watching. If you got value, hit the like button. And remember, you can't forget this. I upload 3 times every week. If you don't subscribe, then you're missing out on content like this about real estate, about money, about business. And I want to see you guys in every video. So comment below what you guys think about this, and I'll see you all later. Thank you all so much for watching, and I'm out.